There's a famous quote out there by Warren Buffett: "A stock market is a device for transferring money from an impatient investor to a patient investor. Which one are you?" Everyone talks about investing in stock market, crypto, and property, but no one really tells you how not to lose money. So in this video, we will simplify this. We will look at how to invest, where to invest, when to invest, and the absolute important one, how to avoid risky assets which can derail your journey. This is investing for beginners, the smart and safe way to invest your money to build your wealth safely and confidently. Let's start with why you should invest. The goal of investing is not just to grow your money faster. It's about gradually building that confidence to grow your wealth on a long period of time. The goal of investing is to grow your money safely while you're focusing on your day-to-day life and the money working for you in the background, just like the way you work for your day-to-day earnings. If you save £100 or $100 and put it into your checking account or savings account, it barely grows. But when you invest into stocks and shares, the money compounds over a period of time. And after a certain point, it accelerates in growth. Albert Einstein famously said, "Compounding is the eighth wonder of the world. The one who understands earns from it, and the one who doesn't pays for it." So when you invest, you're not just saving, you're compounding even while you're sleeping. How and where to start investing for a beginner? The simple and the easiest way to invest is investing in an index fund. An index fund tracks a particular country. Let's take, for example, of S&P 500. This index tracks all the top 500 companies in the US. And some of the companies are Apple, Google, Facebook, Meta, Tesla. These are some of the stocks that you're quite familiar with. This index fund basically tracks those particular companies, and whatever that you put in gets invested across all of these companies. So instead of guessing which stocks to pick, you buy a small portion of all the stocks in that index. So that way you're protected, and at the same time, you're not doing the guesswork. John Bogle, the founder of Vanguard, once said, "Don't look for a needle in a haystack. Instead, buy the haystack." By owning the haystack, you're diversifying your portfolio. That way your money is invested across all the companies within the S&P 500. Even if one company fails, the rest will compensate for that loss. That way your money is not targeted in a single company and expecting it to grow. So when to start investing? Someone mentioned it. The best time to start investing was yesterday, but the right time is now. So start now. Start investing straight away. Start small, but keep it consistent. Imagine two friends investing. The first friend puts away $100 a month at the age of 25, and the other friend waits till he turns 35, and that starts doubling up the same amount that his friend started. By the time when the retirement comes, the first friend, he's way ahead of him because he started early, his money had the opportunity to compound, whereas if his friend started late, that means the money didn't have enough time to compound. Remember, it's not timing the market, it's about time in the market. That's the magic of compounding. Patience outperforms perfection. Now let's talk about how to avoid risky assets. Now a beginner can easily get carried away by all the news and suggestions by the mates and friends, and can get easily caught up in investing into risky assets like crypto, meme stock, and some get rich quick schemes. But here's the truth: if there is something out there which is too good to be true, it probably is. Warren Buffett famously said, "Risk comes from not knowing what you're doing." So invest in what you understand. Start small. Stick to the index funds. And once your knowledge grows, then you expand your investments. So to recap, start early, invest regularly, stick to index fund, and avoid anything that you don't understand. You don't need luck. You need patience, time, and discipline to grow your wealth. If you found this video useful, give it a like and subscribe, and share it with your friends who may benefit from this. And as always, start small, stay consistent, and trust the compounding to build up your financial freedom. See you in the next one.